I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a brand new guest coming to us from New England. He is the Secretary and Treasurer of the Gold Antitrust Action Committee. You all know it as GATA. We have Chris Powell coming to us today on USA Watchdog. Chris Powell, thank you for joining us today on USA Watchdog.
And thanks for having me here, Greg.
You know, with all the fines and all the lawsuits, it wasn't that many years ago that you guys were trying to prove that you weren't a bunch of tinfoil hat wearing guys. And now, if you don't know that the gold market is rigged, even the best experts, Jim Rickard says, if you don't think it's rigged, you should be embarrassed. And so the markets now. It's pretty obvious. It's pretty obvious. But you're saying that the central banks, what you're hitting is that the central banks are rigging a lot of markets, like a lot of people are saying. Forex, LIBOR, fines paid, the gold market, the Treasury bond market, just about everybody, the S&P 500 when they're buying futures. The central bank involvement, we don't have markets anymore, then, do we?
No, there's just interventions. The greatest documentation that's come out recently, Greg, has been filings by the CME Group, which operates the major futures exchanges in the United States. They've filed a letter with the U.S. Commodity Futures Trading Commission back in January, which came out a few months ago, showing that central banks are receiving special volume discounts for trading futures on all the major U.S. futures exchanges, and not just financial futures contracts, but and metals futures contracts, but even agricultural futures contracts. The CME Group's most recent 10K filing with the U.S. Securities and Exchange Commission lists its customers, and included in that list are governments and central banks. Now, this is really a sensational development. Nobody can trade against central banks. They create infinite money. If central banks are secretly trading in the futures markets, there are no markets. The CME Group defended this as a matter of adding liquidity to the futures markets, but it's liquidity in the sense of the Atlantic Ocean. I mean, central banks create infinite liquidity. Nobody can trade against them. It means central banks are controlling all futures prices in the United States. But remarkably, this cannot be reported in the mainstream financial news media. GATA has sent these documents to many major financial news organizations around the world, and it simply cannot be talked about. No major financial news organization dares to ask CME Group or any central bank, what about this secret trading with volume discounts by central banks and all the major U.S. futures markets? Simply cannot be discussed.
They're setting the prices of all the markets. If they want it to go up, they make it go up. If they want it to go down, they make it go down.
Yeah, that's the implication here. Now, the documents don't prove that any particular central bank is trading any particular futures contract on any day, but they do show that central banks are trading secretly in all U.S. futures markets. That means our market economy has been destroyed. It really means our democracy has been destroyed because they don't tell us what they're doing. This is a real failure of financial journalism. In fact, I argue that the greatest asset of central banks is not their power of infinite money creation right now. It's their power to control financial journalism.
Well, if you want to call what's going on financial journalism, or any journalism, that's one of the things that I say on my site all the time. I mean, they lie by omission. They just lie. Yeah. But we're just not going to cover that. We don't have to lie. We're just going to pretend that's not there. It's just unbelievable. I mean, I see that all the time on USA Watchdog. And let's go on to the CME. You brought them up, and they brought up these limit up orders for precious metals that, if it goes up, $100 or $400 an ounce, that they're going to shut down trading for a period of time. And, as a circuit breaker, I mean, isn't that something? They wouldn't put a circuit breaker, on the stock market going up, 500 points, 1,000 points in a day, but they sure will with gold. What's up with that?
Yeah, well, starting on Monday, the COMEX, which is part of CME Group, the New York Commodities Exchange, will be putting trading collars on gold and silver. Now, trading collars are not new in the futures markets. They just happen to be new in the gold and silver futures markets on the COMEX. The the plan, as CME Group has explained it, is to close the gold market and the silver futures market for 5 minutes if there is a variation of $100 in gold and $3 in silver from the previous day's close. The timing of this is very interesting. It's raising suspicions that something is up. Trading collars are not new, but they're new to gold and silver. So we have to ask, well, why now in gold and silver? Is there some special strain in the market that we don't know about? If we had financial journalism on planet Earth, somebody would call CME Group and ask not only about the central bank discount trading program, but ask them about the timing of this particular restraint on the gold and silver markets. But nobody does that.
That almost sounds to me like the bottom is in, and they're ready to push it if they're trading all the markets, as you say, and I don't doubt you, that they're going to try to control the explosion price up. Of course, the U.S. Mint just had another record sales year for U.S. Silver Eagles. So just some anecdotal evidence there. The price is going down and the demand is exploding, which is bizarre. So I just find that to be. So you think that this is a tip-off, do you think, or the folks at GATA or your sources, do you think this is a tip-off, they're going to push it in the other direction? I've long said at some point they're going to push it in the other direction. Or do you think they're going to try to restrict it from exploding?
Well, a lot of people have been waiting for the second coming for 2,000 years. The people at GATA have been waiting for the liberation of the monetary metals markets for, the 15 years we've been in business. I don't want to get people too enthusiastic. Our hopes have been dashed before, but there's ever more strange and crazy things going on in the monetary metals markets, and this is one of them.
Well, you guys aren't really a proponent for the price going up. You just think the price ought to be set by the market, which is going to probably be a lot higher than where it is. Am I reading that right?
We want free and transparent markets and limited and accountable government, at least in the Western world. We are not a gold standard organization. We're not arguing that gold and silver prices ought to be anywhere in particular, but the logic of our research is that there is a vast uncoverable short position in the monetary metals, a fractional reserve gold and silver banking system that essentially is being underwritten secretly by central banks. And the logic of that research is that the free market price of the monetary metals ought to be multiples of where they are now.
And you say there are, and as you say, they're suppressing the prices, and the more evidence is stacking up against them at the fines, the lawsuits, the CME special discounts for trading mass amounts of money for central banks.
Yeah, all you have to do, Greg, is go to the U.S. government's own archives, the State Department archives in particular. You will find that U.S. government policy, very frankly, for at least 50 years, has been to suppress the price of gold and to push gold out of the international monetary system, to marginalize it in order to support the use of the U.S. dollar as the world reserve currency, or failing the dollar's use, at least push people into the International Monetary Fund's special drawing rights, SDRs. But there is document after document at the State Department archive. There's intelligence memoranda that have been declassified. There's stuff all over the U.S. government archives demonstrating this policy to suppress the gold price and push it out of the international monetary system. It's public record. This isn't conspiracy theory. It's conspiracy fact. When government officials meet in secret to coordinate their policies toward gold, to decide to push the price down or at least control it, that's conspiracy fact. People meeting in secret to decide on a course of action is the definition of conspiracy. The European Central Bank has done that at least 4 times in regard to its central bank agreement on gold. The G10 Gold and Foreign Exchange Committee, which we found out about through our lawsuit against the Fed, meets secretly to coordinate Western central bank policies on gold. meeting secretly to, decide on a course of action, that is conspiracy. It just happens to be conspiracy fact, not conspiracy theory.
Do you think we're reaching an inflection point? We talked about this in the pre-interview. An inflection point in gold. I know you said, for the past 5 or 6 years, our hopes have been dashed that we haven't had a real, a price, made for gold and silver, a real market price for gold and silver. But do you think we're meeting an inflection point with all this gold heading east to the BRICS countries, especially to China? Are we getting to a point where they're running out of gold? What do your sources say? Could we have a failure in the gold market to deliver?
Well, there's a lot of reason to think so, but the zillion-dollar question, Greg, is today exactly what it was in March 1968 when the London gold pool failed from exhaustion of metal. And that question is, how much metal do the price-suppressing Western central banks have, and how much are they ready to lose in pursuit of price control? We don't know that. And you're not going to be permitted to know that because the location and disposition of Western central bank gold reserves are secrets far more sensitive than the location and disposition of nuclear weapons. Nuclear weapons are very unlikely to be used, but gold is used every day in order to rig the markets and control the financial system. We don't know how much they have left, but stands to reason as time goes by and the scheme continues, the gold available to central banks for market rigging is diminishing.
Do you think that the CME action, putting these caps on the price going up in gold and silver, is that a tip-off to you?
It's certainly encouragement to people who think that the day of free markets is nearing. But keep in mind, technically, these trading collars, they apply to declines in the price of gold and silver as well as increases. I mean, if the silver price goes down $3 from the previous day's close, there'll be a 5-minute trading halt there too. And if the gold price goes down $100 from the previous day's close, there's supposed to be a trading halt there. Of course, now that most experts think that the gold price and the silver price are pretty much below the cost of production, you would think that the downside for the price is limited, and these collars are more likely to come into play for rising prices. But you never know. Central banks create infinite amounts of money, Greg. If they want to apply them to infinite shorting of the monetary metals may continue to go down.
You were talking yesterday in the pre-interview how you were hearing that the U.S. has a deal with China and other countries with these large treasury holdings to supply them with cheap gold by suppressing it. Now, that is the bigger scheme that the U.S. is going to use their ability to, as you say, flood the market with shorts. They're not going to prosecute the criminality because it is a crime, and they're going to keep on delivering gold, particularly to China, who has trillions of dollars in U.S. Treasury bonds, and they want to offset and hedge their Treasury position with gold. That if they're giving them cheap gold now, it looks like the price is going to be a lot higher if they're offsetting this. What do you say about that?
Well, I think this is informed speculation. I am no expert about it, but I would cite a couple of things. The U.S. economists and fund managers Paul Brodsky and Lee Quaintance wrote a study a couple of years ago in which they postulated that Western central banks and Eastern central banks had gotten together and likely were already redistributing the world's official gold reserves to the dollar foreign exchange surplus holders in order to allow those dollar foreign exchange surplus holders to hedge themselves against the inevitable devaluation of the U.S. dollar. That's what Brodsky and Quaintance wrote a couple of years ago. Jim Rickards, who you've already mentioned today, who's internationally known lawyer and author and fund manager, former bailout chief for long-term capital management, a guy who's had the U.S. Defense Department security clearance and participated in a Defense Department war game a few years ago. He gave an interview to the Anglo Far East gold bullion shop a couple of months ago. in which he said that it was his understanding from officials of the International Monetary Fund that the U.S. Treasury Department has an understanding with the People's Bank of China in which the U.S. Treasury Department is obliged to facilitate China's obtaining gold at a discount in the market in exchange for China's agreeing to continue to hold most of its U.S. Treasury foreign exchange reserves. This is a central bank scheme of cooperation, keeping the gold price down to redistribute the gold that's available to the dollar surplus holders. Now, I don't know that's the case. Rickards is a lot better informed than I am. He has contacts all around the world. He had U.S. Defense Department security clearance. That's what he says. I think it's more than plausible.
Well, that would explain why don't the Chinese and the Russians and everyone, why don't they just dump all their gold? Because they've been bought off by our country and
well, it's more than that. I mean, the Chinese have got a $4 trillion foreign exchange reserve. They cannot disrupt the markets too much without impairing their reserve. If they were to try to exchange all their treasuries today for gold, they'd explode the gold market in about 30 seconds, and they'd crash the treasury market in about 30 seconds. The Chinese are walking a tightrope here. They're trying to hedge themselves as gradually as possible to avoid destroying the value of their foreign exchange reserve. Everybody thinks the Chinese are so smart. Greg, I think they were incredibly stupid. How did they accumulate a $4 trillion U.S. dollar foreign exchange reserve? You can't spend that without crashing its value. Now, the Chinese people worked incredibly hard for a real long time to acquire that $4 trillion foreign exchange reserve. They worked and they sent us electronics and refrigerators and all sorts of cheap consumer goods, and in exchange we gave them colored paper and electrons. They have not been paid until they spend that foreign exchange reserve, but they can't spend it because they'll crash the market. Now, is that smart? No, I think that was incredibly stupid.
Do you think you think we're headed for a price revaluation, and it looks like it's going to be at the upside? A question I constantly get, and I want to ask you guys your official position at GATA. Do you think there's going to be mass, confiscation of gold? That they'll be taking your Krugerrands and your American Gold Eagles and all that? Do you think there's going to be a mass confiscation of gold?
I doubt it, Greg, if only because it wouldn't accomplish much in the United States. Gold is no longer part of the money stock of the United States, or at least the money stock in private hands. Whatever the government has, it's part of their money stock, but the government's already got it. So I don't really expect confiscation, but I wouldn't be surprised by windfall profits taxes. I wouldn't be surprised by nationalization of mines. I had some correspondence with the Treasury Department a few years ago. I wanted to know what the Treasury Department's policy on confiscation of gold and silver was, because there's so much paranoia about it in the monetary metals cult. Finally, with the help of my congressman, I did prevail upon the Treasury Department to answer me. And Treasury Department's, I think it was their Assistant Secretary for Foreign Assets Control, replied to me. His reply is in the confiscation section of our internet site, GATA.org. He told me pretty candidly that the Treasury Department's on confiscation was as follows: that under the Trading with the Enemy Act of 1917 and the Emergency Economic Powers Act of, I think, 1977, the Treasury Department claims the power upon a proclamation of emergency by the President of the United States to seize or freeze any financial asset involving gold and silver. But he told me I shouldn't get too paranoid about it, because under the same two statutes, upon a proclamation of an emergency by the President of the United States, the Treasury Department claims the power to seize or freeze any goddamn thing it wants. So, we're always in danger of losing our democracy and our free markets over here. The Treasury Department's position is that it can take anything it wants from you if the president declares an emergency. Now, the logic of this is, if you've got any assets you're worried about, it might be good to disperse their location.
But that's pretty far down the tree. I find it hard to believe that after selling gold and silver eagles to the U.S. public since 1986, that all of a sudden one day they're going to say, hey, those are illegal.
No, I'd be very surprised. I do think there's still a little bit of desire for independence among the American people. I think they would resist that. It would be resisted in the courts. It would probably be resisted to a certain extent through civil disobedience. And I don't think it would accomplish much for the government. When the government seized or purported to seize the private gold holdings in the United States in 1933, there was a reason for it. There was a rationale. That is that the gold stock constituted a big part of the official money supply of the United States. The circulating gold coin was money. I mean, it's not money today. Back in 1933, there was, a depression. There was a catastrophic debt deflation. Many banks had closed. Of course, people were holding gold. They couldn't get their money. They'd lost their money in the banks. The government wanted to get this money back out into circulation, or at least that was the story. There was a rationale for it in 1933. Today, there's really no rationale for it.
But gold still is money, though. I mean, when you said gold is not money, that's according to the official circles, Greenfield.
Oh, right. Of course it's still money, but it is, as a practical matter, it is not circulating as money in the United States right now. But it's not only money, Greg. It is the most powerful money on the planet. It is, in a titanic struggle against totalitarian government. Totalitarian government will either control gold, or gold on behalf of individual liberty and free markets will knock totalitarian governments right over.
Let's finish up here with what the Fed said last week about, this is kind of, we've heard about all these great numbers, and unemployment is under 300,000 for, 13 out of the last 14 weeks or whatever. I mean, all this great news. Oh, the economy is fabulous. And all of a sudden, the Federal Reserve feels like it has to be driven to come out and say they're going to be considerably patient in terms of raising interest rates. I mean, they were talking, middle of 2015, they're going to start raising interest rates. And now they come out with this statement, considerably patient. Did the Fed just blink, or did the Fed just signal that, economy's not as good as what we've been cramming down your throat for the past 5 years that we have this recovery? What's going on with that statement? Why do you think they are compelled to say they're going to be considerably patient? And what do you think it means?
Yeah, the Fed is making itself ridiculous, with the raising of interest rates, for months, Greg. It's been ham tomorrow and ham yesterday and, never ham today. I don't think the public believes the brightening economic data story. They tell us all the time that unemployment is falling. What they don't tell us is that the labor participation rate is falling in tandem. That is, that more people are not working as a percentage of the population now than has been the case in 30 years. Unemployment is falling only because so many people are giving up on ever finding a job and dropping out of the job market and deciding to live on various government income supports. People in the United States know they're being lied to. The economy is not strengthening. When people are getting jobs, they're getting jobs that are, coming down quite a peg in salary from the previous jobs. The standard of living in the United States has been declining for at least 2 decades. It's continuing to decline. The economy is not strengthening. All the economic data is spun. Much of it is outright lies. And I think last week, where it changed its terms without raising interest rates, without really making any effective change, I think the Fed has made itself ridiculous.
Are they signaling that if they're saying this now, we're going to be considerably patient? Is there going to be some week or day in February or March or April where they have to bring back some sort of QE program that they have to liquefy the markets once again? I mean, I suspect we're going to have a pretty terrible Christmas when it all is said and done.
Yeah, many experts think that the Fed will never raise interest rates in our lifetime, and that there will be a succession of quantitative easing programs. I fear that the result of this 10 years from now is that the government's going to own everything. That to sustain prices, the government will have had to have purchased everything, and that we don't have any free markets anymore. And I think that's really what we're coming to. But again, my group is dedicated just to exposing what central banks are doing in secret. The central banks are intervening in markets daily and probably hourly, according to the documents that we have obtained and we've published. And I just wish we could get the mainstream financial news media to get into this story, to publish it, so that we might get our free markets back someday.
Can they lose control? Are we going to have a day in 2015 where that's it, game's up, jig's up, no more gold, markets blow up, their manipulation doesn't work? Is that coming?
It could come, Greg. I think it is more likely that we will have ever greater applications of what even some central bankers lately have been calling financial repression. That is, more and more intervention by central banks in markets to defeat markets, to control prices, capital controls, price controls. I think, Greg, that for 5 years, at least so far, the main purpose of Western central banking has been to make sure that no markets happen at all. Now, they could lose control, and we could return to a market economy very abruptly. I fear it's more likely that we're just going to have more and more financial repression, more and more totalitarianism in the economy, and eventually a very candid acknowledgement from the governments that we cannot be permitted to have free markets anymore.
But if they do explode, because these are men and women, they're not gods, but if they do explode and we return to a market economy, what happens to the price of everything?
Oh, I think the price of real goods rises against the price of financial derivatives and paper, which probably falls, because there has been so much money creation and credit creation in recent decades, and the demand for inflation hedges has been pushed into derivatives and away from real physical goods. I think if things explode, if there are shortages, particularly in the gold market, if derivatives fail, then I think hard assets gain in value, real things, and financial instruments lose.
And do you think this recent passage of this bill, final question, passage of this, the spending bill, the omnibus, whatever you want to call it, it's crazy, that they have decided to, get rid of the only provision, as Paul Craig Roberts, former assistant Treasury Secretary, says, the only provision with teeth, and that now they can, they signed into law, they can gamble with depositors' money, and if and when, I should say, when this blows up in the derivative market, that depositors are now second in line, and they'll have to go to the FDIC, which has no money. Do you think this is a tip-off that they think that the derivative market, especially with the oil derivatives, is in trouble?
Well, the derivatives position, the repeal of the Dodd-Frank prohibition on speculation with depositors' money came out of Citibank. It came out of the banking industry. There could be some politics to it. This could be the mechanism by which Wall Street by which the Republican Party reingratiates itself with Wall Street. But again, it's the timing of it is very suspicious. If this signifies, as many people think it does, that financial institutions are especially vulnerable now to a derivatives blow-up and want to be bailed out by the federal government, then it's one more indicator of the utter corruption of our government here in the United States and the destruction of our market system.
Chris Powell, the Secretary and Treasurer of GATA, Thank you for joining us today on USAWatchdog.com. We hope you come back if you have any new information, any new reports, new lawsuits. We hope you come back to USA Watchdog again.
Very glad to be with you, Greg. Thank you.